Righto, welcome to the blog for Wednesday, the 19th of September. On the daily charts, we're still hanging right up near these tops here. We're getting it into a bit of a range now. The market's stalling at the top, and the 15 minutes shows that basically 1, 2, 3.5 days we've been sticking tight in this 10-point channel. So what they're building is pressure and compressing. Just really worth keeping an eye on is as we trade, and while we're within this range, where it's obviously the market's going to be stuck within these two areas, but as soon as we get out, that's certainly going to be a release of the pressure, and we should see a bit of a push through and a continuation, whether it be the downside or the upside. But certainly the downside is one that could have some more pressure with it and quite quickly pop down and maybe test some levels around here. So the thing about that, I mean, to use as well, like as far as up here, here's this double top which we made right at the top of that 15-minute range as well. So if we're seeing some of that and I'm looking for, say, a breakout trade, it's going to be very difficult to take anything here knowing that there's strong resistance, and these key levels could almost be pushed out a point as well. So 58's been quite a key level. It really is starting to become 59, and same as down here, 50 is a key level. Really, it's starting to become 49. But they can definitely be adjusted as we move on through the market. As for the first directional move, here's a box around the pre-market data. It popped out to the bottom side, popped out to the top side. Both sides were not convincing. Like the downside here, first of all, there's no particular pivot to base it on. It's like what I love to see is say at the end of this candle here, pop right back up into the range and then go at the bottom of this pivot again. That's just ideal. See all the other markets breaking, be all over something like that. Fact is, it's gone straight through this pre-market, so look for it to come back, and it's not my preferred entry, but come back and get a limit order and use this as a resistance to then push lower. As it's coming back here, looking at the other markets, especially the Russell, it was coming right back within its range, so it's one that to be very careful of. It didn't look like it had the momentum to keep on going, even though this one's eventually gone, I'll say 9 ticks away from resistance, but it's come back in, and the news didn't really help too. It brought it straight back in really quickly. Other thing about this area is too is we haven't had a real continuation of the first trend for quite a while. And it's worth having some sort of indicator or some sort of way of approaching the markets where you give yourself a percentage or a probability rating of how likely you are to get a breakout at the start of the day. I know when this trade's hot and working really well, it can go days on days and days just getting multiple continuation trends, and just cleans up. Then obviously just most recently, you'll get some half signals or a lot of iffy signals, but they just fail to break it, and they just keep coming straight back within the range. But usually you can get a bit of an idea of that by having some sort of couple of indicators uh, for deciding on what type of trend day. And there's a few things I like to use just to quickly go through them. Um, it's a video that I recently got from another member that goes through a few things, and uses of things like whether there's a large gap. So when you see a large gap from the previous close to the opening of today, that's likely to get a continuation if it's breaking. So like we said, if you 15-minute chart here, if all of a sudden the pre-market, so here's the market here, if we're suddenly popping up out of here and breaking outside of this range, then it's likely to continue on. So if we're breaking a trading range, so definitely keeping an eye out for that soon. If it's sticking within a tight range like it's doing now, same sort of thing. If it breaks that tight range, it's likely to get a continuation. Opening drive or opening thrust, so when you see the market really just go and strongly with increased volume. So what you can do is go here, go to show, and click here volume, and it shows volume. So this particular one, quite low, 35,000. If it's high volume, actually that's medium, that's not too bad. So, and you can see today it has got a little bit of momentum out there, but it's quickly come back. But if it's low volume, it's got no real power. It'll sit around 15, 20,000. If it's got good volume behind it, you'll see more like 70, 80,000 per 5-minute bar. But yeah, so what you want to see is a movement with strong volume behind it. But this is mediocre average. It's not like it's above usual. But by going through the different charts, you'll get an idea for that. if you are looking at sort of anything like opening volume and things like that, again, it's just about going through the charts and finding what's average, what's below average, what's above average, and having that sort of level to gauge yourself on. So that's some indicators as far as the opening direction. Some of those I've just only recently added through the video I saw, but some of them have been around for a while. Initial volume, breaking of a trend, so that's why I keep these 5-minute charts. If we're breaking significant area, like at the moment we've got 2 significant areas. As soon as we see the market break, which actually we're doing it right now, literally right now, but if we come into the opening of the cash market and we've broken a significant area, that's a great day for directional trends. Really great day. So very much stuck within the range, quickly popped back up. Same top side, it had nothing. Dow Jones was one that was looking like it was one trying to push higher, but the Russell and a few others, they were having a really decent pullback and looking like they were really trying to push these markets lower. So certainly wasn't interested in the top side of the range there. Then we started coming down and dealing around this 54 area, and the market's really dealt around this 54 area quite a few times. It did push through by more than 8 ticks, so then what I look for it to do is come back, uses the resistance and get a continuation. But that's based on the moving average as far as the direction. This one here, just quite flat. It just didn't have any power behind it. Just one that I just wasn't interested in. Just didn't think it could hold. What I was really interested in was this side here. So all of a sudden it's tried to push low. It's failed. It's pushed up, got back above this particular level. And so the other thing about this previous area here too is the fact that there was a gap just right here as well, acting as support. So the fact it got above the gap, got above 54. As soon as it pushes through by 4 ticks, look for it to come back, use this area as a support, and then buy. So I don't actually a limit order here at 54. It just missed it, and then away it went. But that's a lot more ideal. That's my version of the 5-minute buy. I call that the 5-minute continuation. So that was probably the best opportunity of the day, and looked like it was ready to potentially go higher from there. A couple of areas, as far as this breaking higher, again, it's running straight in the top of that range on the 15-minute chart, so you've got to be very careful there. The market's come back as far as looking at reversals, so coming back within the range, so breaking this point here as far as here, or breaking this point over here. Both areas just lacked other market support. Obviously this one would have failed badly. This one here would have worked well, but again, ES led the downside here. The Russell, a few other areas, just wasn't really interested in, looking like it potentially could break down here, and it's obviously getting very late too, just before 4 o'clock. So potential setups at a couple of points here, but just couldn't tick all the boxes, so nothing there. So again, tight ranging day, limited number of trades, but that's the way it is at the moment, and just looking for this market to break out of that range that we're looking at on the 15-minute chart. So that's a wrap up for what's today, Wednesday, and back on Thursday.